Okay, I think we're going to start. I'm told there are more than 70 people listening, so let's start. Hello everyone and welcome. My name's Ali. I'm a relationship partner at Cooper Parry and I work usually within the audit team. I'm also part of our COVID team, which is a group of us deciphering the assistance the government are making available during the current time. So today I'm hosting a webinar, the first in a series that we intend to run. And I would love to say I'm not going to make a habit of talking to my laptop screen, but for the time being I am, as I'm sure we all are. Future webinars will be based on what you want to hear or need as the story unfolds, so let us know what would be helpful in your comments or feedback. Today covers what your business should be doing right now, with a focus on technology, tax, cash flow and funding. So let me hand over to other members of the COVID team for them to introduce themselves. So over to Steve Brooks.
Hi everyone, I'm Steve Brooks, Consultancy Director in Cooper Parry IT. And from me, what you'll get out of today really are some thoughts around the most important tech and systems concerns affecting you and your business, and then also some thoughts on what the future will look like, specifically around technology. Over to Andy.
Thanks, Steve. Andy Parker, I lead our corporate finance business at Cooper Parry. Today, I'm hoping to tell you something about the support that's available for government and how to get your hands on it. Over to Suki.
Hello, I'm Suki and thanks again for joining us. I'm a partner in the business tax team and also part of the COVID-19 task force. I'm going to give you some headlines today about the financial measures introduced by the government. And what I'd really like to do is for you to go away understanding which of those measures you're going to have to pay back and also which ones you're not. We've got Mark Baxter and Damien Shirley. Damien, a VAT partner, and Mark Baxter, one of our technical specialists. So they're on hand today to answer any technical queries. And I'm going to hand you over to Simon Morris, who's our head of private client.
Thanks, Suki. Hello, my name's Simon Morris, as Suki's just said. I'm a personal tax partner and here at Cooper Parry I also lead the private client team. And what I'm going to talk about briefly are some of the key things that are happening that affect individuals as taxpayers. So back to you, Ali, I think.
Thanks, Simon. So my role is to keep us on track and I will do the best that we can deliver in an hour. So I will be nudging these guys along if I need to, but there will be plenty of opportunity for you to ask questions. So please ask away. If we are inundated, I should just tell you we will get back to you, but that may be offline later. So Steve Brooks, over to you to talk technology.
Thanks, Ali. First things first, can everybody see my screen okay? Or Ali, Steve, give me the nod if it's shared okay.
That looks fine to me, Steve.
Great, cool, thank you. Okay, thanks everybody again for joining. Like I said, my name's Steve Brooks and I'm a director here at Cooper Parry IT. So I guess first things first, thing to acknowledge is, you know, we're a Microsoft partner, as some of you may know. What I'm going to talk about today is going to try to stay as agnostic as possible. I don't really want to be pushing products onto you. So I'll stay pretty impartial. Clearly, my background's sort of kind of coloured by the knowledge I've got of Microsoft products, but really what I want you to get out of today is advice, best practice, information about what we're seeing and how we can help, you know, with technology, solving the problems that you've got. So with that in mind, I want to talk you through kind of what we're seeing now, what best practice looks like, and some of the important things to focus on for the coming weeks. What you can do to prepare your technology, your systems to be as resilient as possible. I really like this quote from my mate Bill Gates that said, you know, we always overestimate the change that will occur in the next 2 years and underestimate what will occur in the next 10. And I think that sums up this situation quite nicely. I don't think we're going to come out of this as fast as we think, but likewise, we need to have an eye on the long term. Either way, I don't think, you know, wait and see and do nothing right now are kind of sensible approaches. So where are we now? So 4 weeks into lockdown, we have got a little bit of clarity. We've moved from 6% of people mainly working at home through to 46% of people mainly working at home. Obviously, it's a massive change for the businesses and the employees affected. Some businesses clearly much worse off than others. For for some working from home, you know, all those kind of key workers out there, and boots on the ground workers out there, working from home is not an option. We've got somewhere clients have closed production, somewhere they've got factories, somewhere their own customers have told them not to come on site. You know, companies in the house building sector and things like that. Some of what I talk about today will be more relevant, you know, to businesses that are still trying to do business as usual. But I'd like to think that some of what I say is relevant to all industries. So the way I see it, most sectors and kind of businesses are facing issues in these key areas: people, cash, the work, availability and ability to deliver it, and profitability. So with the first of these, on the people side of things, you know, my view is that looking after your people is priority number one. You've probably moved already, if you can, to working from home. You know, the stats show that shift's been made. If you haven't, I think you need to be talking now to your head of IT or to your IT provider. And to that point around, you know, if your industry can't necessarily do it, there's the factory to run or something like that. Well, can finance, can HR, can procurement, can sales work from home? Once those kind of hygiene factors have been delivered, I think the most important thing right now as we go into kind of week 4, 5, 6 of lockdown is employee engagement and employee morale. Internally at Cooper Barry, we've used Microsoft Teams to kind of create a CP Together at Home channel where we have activities like fitness, yoga, photography. In Cooper Barry IT, we've got a team Taskmaster competition going on, which was an idea from one of the team, and we've been having kind of best party trick, best camouflage, how far you can throw a tea bag into a teacup. You know, what you do and the platform that you use isn't the important thing. Microsoft Teams, Slack, all user emails, although I don't really recommend those. The important thing is that you try and shift that kind of workplace office culture to being a digital culture. That's something that we're proud of here, but there's no reason that all businesses can do that. These tools to facilitate collaboration, they're not expensive and they're not hard to put in. And I think the platform that you use, whatever it is a really good way to update the team as well. You know, communication goes a long way to settling uncertainty, settling those nerves. You know, you've got people going on to furlough, you've got people unsure about where their job is going. And I think that these collaborative platforms that exist, if you've not got one there, think about actually, can you put one into place? A lot of them do free trials, cheap licensing. Again, I don't think that should be a factor here. On to cash. Now, it's not an area where I'm an expert. Andy's going to talk about that. But what is crucial is thinking about how your systems can help you focus on cash and access to funding. Is your system helping your business? Will you have enough cash in the bank for VAT and salaries? You know, when we're thinking about a good system, it's one that gives you the data that you need to make these informed decisions, to be able to forecast cash, to be able to report on the data that you've got, to drive business decisions, to make a business plan, to do more, I guess, than just take your sage that you've had for the last 10 years and kind of, you know, chuck out a trial balance. Again, I don't really mind what platform you use, but we've got, you know, NetSuite, Xero, Dynamics 365, SAP Business One, Accounts IQ. There's a whole range of great systems that have that functionality to drive business intelligence and take that kind of financial reporting and intelligence one step further. And the return on investment on that can be very quick. You know, we're talking about kind of upfront fees, in our case, if a few grand spread out over several months, it can drive a lot of business value. But I think, again, if you've got something like that, you may have it in place already. Look at what you have and look at if the data in it is helping you put your kind of financial reporting in its best light, particularly with regards to cash and cash flow. And then on to work and kind of the availability and ability to deliver it. If you sell physical products, now I think it's the time to start looking about how you sell it. Can you sell remotely? Can you deliver remotely if you work in a service-based business? You can set up virtual sales offices. You can probably get your salespeople to get the best kind of webcams and kit they need to show products in the best light. I actually had an email recently from IKEA, who, you know, are pretty traditional in a lot of ways. They're very bricks and mortar. They are offering me free online planning for my next home project. They do an hour online meeting. I give them room dimensions. We chat through what I might want, and then I can order it online and have it delivered to my house, which I thought was a real neat pivot from a kind of traditional business. And I'd encourage you to think about actually what sort of things could you do in your business to make those sorts of changes. And then finally, on the profitability point, you need to know, again, coming back to that business data, where, and hopefully you are still making profit, is it coming from? Or where are you making losses? One of our clients was able to reduce the number of SKUs they offer by a third and actually improve their profitability. So if you're using your system and just getting stock and cost of sales and things like that as a balancing figure, because you can't account for it accurately, you're not doing your business justice, and you need to be able to report on it. So whether that's Power BI or Tableau, there's a lot of dashboarding tools that can really kind of bring that data to life, which again helps making business plans. They're in the cloud, on the phone. They can do management reporting live, not 3 months after the month end. And again, in the situation and times we're in now, I think that might be the solution to kind of separating yourself out from some of your competitors. These sessions are quite short, so I'm going to skip on to kind of my quote from slide 1 and where we're going in the future. I don't think, I think we're probably all of this opinion, there is no business as usual. And I think from a technology perspective, we need to be thinking that the ways that we're working now are going to be some part, maybe not quite so intense, but they are going to be some constituent of a new normal. So I think you need to be thinking about collaboration and new ways of working. Can your team access documents and work together without potentially coming back into the office? Do the business processes support a disconnected workforce? Can you have email invoices from suppliers? Are you making sure approvals are done in your system with workflows instead of stamps and physical signatures? Because although those changes might have taken a back seat over the last few weeks, you probably are going to have to evidence this stuff at the year end. So doing it digitally and facilitating maybe a remote audit will be a lot easier. And with the schools shut and unusual working patterns, how can you make sure people are still getting things done? How are you communicating? Slack, Teams, Google Currents, they may have seemed unnecessary before, but they help glue that kind of workforce together. And then my final thought really is, how are you going to work with your customers and your suppliers? Are you going to be able to travel to China to tour factories? Are you going to be able to do networking at trade shows? Is that travel even going to be necessary? Because I think where we are and for however many months these kind of changed working conditions last, you're still going to need to be able to talk to suppliers and talk to customers. And we want to try and get some semblance of normality. To my mind, the best way you can do that is future-proof your business, deploy the technology. It's no longer really nice to have. It's about access to finance, keeping the lights on, keeping people employed. But it doesn't have to cost the earth. Your IT, whether that is in-house, whether it's outsourced, they may already have a lot of this stuff licensed. It's just not been deployed. So think about actually what tech do you have available? Have you deployed it already? And if not, can you? With that, I'm more than happy to take questions. Absolutely. And thank you very much for listening.
Thanks, Steve. Steve W, what have we got for questions for Steve at the moment?
We got one question that says that these solutions sound very good for professional services like Cooper Parry, but how can this work in, say, construction or manufacturing environment where we rely on boots on the ground and tools?
Yeah, that is a good question. I realise, I sit here in a service-based business where really people just pay for our time and our thoughts and things like that. It's not the same as if you're making product. But I think for those businesses who have had to kind of implement more or have had more difficulty adjusting, there's no harm in part deploying some of these things. I think, finance, HR, procurement, sales, whether it's the IT team, whether it's kind of some component of the process, if you can even put some tech in to support how those guys work and cut costs in those areas and make them, able to work remotely, able to collaborate, able to kind of do all of those back office processes, you'll still have gone a hell of a long way, even if that means keeping the actual factory or, or construction sites open.
Anything else for Steve Brooks at the moment, Steve Whittle?
Not at the moment, but people can still ask.
Okay, well, if that's the case, yeah, please ask if you've got anything. Otherwise, I'll hand over to Andy. Thank you.
Thanks, Steve. That's really helpful. As I said at the start, I lead our corporate finance business, and what I plan to do in the next few minutes is give you a flavour of the lending that's available from the government and how you get your hands on it. A month or so ago, if somebody had said Sybil to me, I would have thought of the guest house in Torquay and the wife of Basil Fawlty. Now Sybil's has become part of the everyday language. So Sybil's, the coronavirus business interruption loan scheme. So what is there out there? Well, the fundamental part of what the government has done is put some guarantees in place for facilities that companies and businesses can borrow from the banks to enable the banks to take a lower risk and therefore lend more quickly in the situation that all the businesses find themselves in through lockdown. So I've always been told when I'm presenting that I should do this with nice, simple slides, but I've failed to do that. So with a bit of luck, you will be seeing a slide here. And I've tried to just sort of categorize the schemes across the top, and 2 or 3 things on each of those. Firstly, for companies up to 45 million, the loan or facility available is up to £5 million. And for 45 to 250, we're at 25 million, and greater than 250 million turnover, you can access £50 million of government-backed loans, i.e. the government provides 80% of the security. A difference between the schemes is how long the tenor over which you have to repay or refinance them. So for the smaller businesses, it's very attractive of up to 6 years. For the larger businesses, they have to be refinanced or repaid after 3 years. One of the questions that we're often asked is around personal guarantees. And any loan of up to £250,000 of value, the bank cannot insist on personal guarantees for those. For larger loans, they can ask for them, but the amount that you are liable for is just 20% of the facility that's the amount that's left after all recoveries. Sorry, I just got a signal say there's an issue there with the signal. So hopefully you can still hear me.
Yeah, can still hear you, Andy.
Great. So how can you get your hands on it? Well, I've spoken to a number of bankers, some of the leading bankers in the region, and the advice that they are giving is go to your local bank, the bank that you use on a daily basis. There's over 40 banks and financial institutions have signed up to this programme, and so it is highly likely that your local bank, the bank that knows you, will be signed up for this scheme. And in fact, I've seen on other deals that I'm working on where there are sort of the clearing banks involved, they've actually backed away from new business because they're focusing entirely on their own portfolio of companies and putting them first, which is I think is a positive sign from those banks. So what about the eligibility criteria? Well, here I've got a slightly less challenging slide. With a bit of luck, I will go down to the next one there. So the eligibility criteria, firstly, it's a viable business, and I'll come back to that. Then it's UK based. The turnover calculations are based on the group of companies, not just the single company if it's part of a group. It has to be impacted by COVID-19, but that's a self-certification matter. So again, get some evidence, but make sure that you can explain it. But I think that's quite an easy one for most companies to do. And there is no CCFF, which basically is government buying bonds of, frankly, much larger businesses. So the eligibility is quite wide. Take that off there. I said I'd just come back to that viability point. The way that the banks are interpreting this is that before the crisis, was the business viable? Was it profitable? Was it generating cash or growing towards profitability? And would, in normal circumstances, the bankers be expecting it to be continuing and profitable? And also, critically, after this crisis is done, will it be able to repay the loans? So the bank's got to go through that assessment. And what's really important is you help them to make it clear and make it understandable for them so that they can put the application in and you get a successful response from their credit committee. So what do you need to do for that? Well, I think the big part is about looking at the cash flows. Cash flows over the 3 to 6 months, however long we're going to be in the lockdown. And I'm seeing several companies do a number of different scenarios for that. And remembering when you're doing those cash flows, as we come out of a downturn, that's a time when businesses often eat up working capital. They're having to invest in stock, they're having to invest in debtors as they grow and sell more. And that's often a time when businesses fail in a recessionary period. So really think through your cash flows, and we call it stress testing. Really put some pressure on them, throw the kitchen sink at it to see what the worst case scenario is, and then structure your financing requirement based upon that. And you need to put together a comprehensive pack of information to the banks, and that will be historic accounts, your latest management accounts, that cash flow forecast that I talked about, but also the business plan. And that business plan is about what happens after the crisis. What are your expectations about growth and potential within the business? So there's quite a bit of work that needs to be done. And then the big tip that I get from the bankers is summarize it really simply, really clearly on a few sheets of paper that they can lift up and use as their credit application. What other funding support is there out there? Well, there are other forms for different sorts of businesses, but I thought I'd just highlight one, which was announced yesterday, the Future Fund, which I think is really exciting for all of us as UK taxpayers, that the government, for £500 million out of the £1.25 billion that it's allocated to this particular fund, on those it will issue convertible loans, which they will go into young businesses sort of that raised money in the last 5 years of £250,000 or more. But they will go into those sorts of businesses which are expected to be high growth businesses as we come out of recession. And because those loans are convertible, that means we as taxpayers in the UK will have a stake in some of those businesses. And if, as is often the case as we come out of recession, those are the real strong performers, then we, the UK government and the people of the UK, will benefit from that growth through those companies. So I'm going to stop there because I can go on forever. So if you have any questions, please ask now.
We do have a couple of questions. David Ainge is asking, our bank is pushing us towards an overdraft and not a loan. We suspect it's because they'll make more fees with overdrafts. Are you hearing this from others?
I think the onus probably comes back onto you as a company to explain to them what the right what structure of support you need, because it can be overdraft, it can be loan, it can be a revolving capital facility, it can be invoice discounting or other asset-based lending. So I think if you demonstrate what you need and what you want, then that is the better way forward. I think I guess with an overdraft, it tends to be a shorter term period. So that may be something that looks easier for the bank to deal with.
Guess, Andy, my comment on that as well. It's technically repayable upon demand. Absolutely.
But yeah, again, the banks are going to be under some pressure from the government. I think if we see a lot of overdrafts withdrawn suddenly that have been gone through this process, I think there'll be questions to be answered.
Mm-hmm.
If we have time, we have another great question here. It is anonymous, but I think is quite relevant. How many loans for companies have you seen approved so far? Interested in timescales for approval. Also, what interest rates have you seen approved?
Okay, so the latest numbers that I can see, official numbers, are about 6,000 loans out of 22,000 applications, but that's about a week ago. So I know that has accelerated. The interest rate that banks are applying is supposed to be based on the viability of the business before the crisis. So the sorts of loans and facilities that they would have put in place had it not been for the crisis is what they should be applying now. So if that's not the case, then I think we need to again raise the question. There was a third part to that and I can't remember it.
1 second. Yeah, so how many companies have you seen approved? What sort of interest rates and the timescale?
Timescale for turning it around. Okay, timescale, I'm seeing some have reacted within 2 weeks. Some have not had responses back yet. And I think part of that is make it as simple as possible for the bank.
Is that it for Andy, Steve, as it stands now? Or have we got any more?
I think for now, yeah, that's what we've got, especially in the time frame. We are attempting to answer some questions privately.
Oh.
Okay, thanks very much, Steve. I'm going to hand over to Suki.
Hi, thanks, Andy. Yeah, so we've talked there about the governments and the banks working together to provide some finance. What I'm going to do now is just talk about some of the other financial measures that have been announced, and I intend just to give an overview of those. And as I mentioned in my introduction, what I'd like to do is distinguish between those that are real cash, where you don't have to repay it back, and those that you will. So it's cash flow, that you will need to pay them back. So if we can cast back to budget, and that's when we started to get these financial measures come through. So March the 11th, and I say March the 11th because budget day is like Christmas Day for tax advisors. You get some things that you like, you get some that you don't like, and you're really busy for the whole day. So in the backdrop to the budget, we'd already seen an election budget. It's always quite exciting, and the planned corporation tax reduction to 17% was canned, and the government stuck with 19%. On top of that, at that point, there were around about 500 cases of COVID confirmed in the UK. So obviously concerned looking at our European counterparts who had suffered, particularly Italy, more so. It was a very cautious budget with coronavirus in mind. So there were a couple of breaks that came out of that budget, and there were two key ones really. And these are measures that you don't need to pay back. So the first was a break in the form of statutory sick pay, and this is for businesses that have got less than 250 employees. So what you can do with these businesses is you can claim a rebate to cover the cost of 2 weeks of statutory sick pay for an employee. Now that claim facility is not available yet. It's going to be an online facility, much like the job retention scheme, which we'll come to cover in a bit. And what HMRC and the government have said is that for record keeping, you'll need to keep your records for 3 years. So that was the first break. The second break was in relation to business rates. Now, there's two different measures that have been put in place. And again, you don't have to repay these. The first of those was a business rates holiday for the 2021 tax year. And that's applicable to any size of business, but in particular sectors. So the retail, hospitality, childcare sectors are the ones that will benefit from those. The second, and this is again a very specific measure, and this is cash grants of up to £25,000 for certain businesses where you're occupying commercial premises and the rateable value of those premises is less than 51,000. Now, what local authorities will contact you themselves if you're eligible for those grants, those cash grants. And there was an alert that was put out from the government yesterday, and I was quite staggered by it actually, because it said that over £6 billion have been paid out under these government grants, and that was benefiting I think it was just under 500,000 properties, commercial properties in the UK. So very, very far-reaching. Now, as I said, the real budget, it followed after March the 11th, because the rest of what we had was it was deferrals of tax, like most notably, it was the VAT holiday. And that again is an automatic VAT holiday for UK registered VAT businesses for liabilities up to the 30th of June. And you've got that extension until the 31st of March 21 to pay that VAT back. And then you've also got the time to pay arrangements. Now they're not a new thing. So what you can do essentially under these arrangements is you can ring up the revenue. You can say with me any tax liabilities, so your VAT, your PAYE, your corporation tax. If you're a quarterly instalment payer, you can phone them up, agree a plan to defer that liability, and be prepared just to answer some questions around why you're asking for that extension, mentioning, of course, COVID-19. And before moving on just to the job retention scheme, there are already some quite generous tax reliefs out there. So not to lose sight of those. We've got research and development allowances. We've got a generous tax regime for capital allowances. And also there's some really easy ways to claim back your VAT. So I'm going to hand over to Simon, who is going to cover the hot topic of the day, which is the job retention scheme. Well, I should say it's probably going to be the hot topic of this week. So over to you, Simon.
Thanks, Suki. Before I get on to the job retention scheme, it's probably worth just mentioning a couple of other things that have happened. So in the main budget, the big change for individuals was the renaming of Entrepreneurs Relief, which actually became called Business Asset Disposal Relief, and the limit of that was cut from a lifetime allowance of 10 million to 1 million. And that gets you a lower rate of CGT when you dispose for qualifying business interest. To be honest, I think from the conversations we've had with clients recently, I think the rate of CGT they're paying a disposal is probably a distant third behind what is the valuation of the business and actually what's the liquidity in the market to be able to sell, but it's just worth remembering. The second big change was in the middle of the COVID scenario, was the announcement that any individual who had a payment on account that was due on July the 31st, that would be automatically postponed to January the 31st, 2021, and that there was no interest payable. Interestingly, the revenue said that even though this is an automatic deferral, if you are able to pay, then you should pay. No other guidance on that. And I think what this demonstrates is quite unusually, I think the Treasury and the Revenue have taken the steps that they need quite simple solutions. They need to get money to benefit people quickly. And I think there's an acceptance that sometimes some people might benefit who don't strictly need to, but it's more important that we get the money in the right hands. Then that brings me on to probably the big topic, which is the job retention scheme or furloughing. Probably fair to say that when we look back on 2020, there will be two words that have entered the public domain. One will be furloughing and one will be COVID. So what is the job retention scheme? Well, essentially it was introduced and it was introduced really rapidly from Rishi thinking about the idea to the announcement being made was 48 hours. And it was a scheme that was put in place. So if you are an employer and you, because of the current crisis, you don't have enough work for employees, rather than losing those jobs, it was a grant that would enable you to keep the jobs open. So how does it work? Well, it applies to employees who were on your payroll on or before the 19th of March. And there's a little bit of a wrinkle here in that not only do they have to be on the payroll, but you actually have to have notified HMRC via an RTI or real-time information payroll return on or before the 19th of March. You have to agree with the employee in writing, although email exchange is fine, that the employer will cease all work for you. And you have to keep that evidence for 5 years. And that's slightly unusual in that the normal requirement would be to keep a record for 3 years, but here they're asking for 5 years, which I think suggests that they might take a closer look at companies that have used this scheme and they're giving themselves some time to do it. What can you claim? You can claim the maximum of 80% of a person's normal pay, or £2,500. In addition, you can claim the employer's national insurance on that payment and also the statutory pension contributions. You carry on paying the person. You have the choice about whether you top up additional salary or not. I mean, in our experience, most people are not topping up. And you then make a claim for the £2,500 via the website, which opened on Monday. Interesting, on the first day, they had 140,000 employers made a claim to get the grant back. The key factor to bear in mind is that if you furlough an employee, they're not allowed to do any work for you, although they can do training. There's a minimum period that you can furlough someone for, which is 3 weeks. You can then re-employ them on the normal salary and then you can re-furlough them. But the furlough itself has to be for a period of 3 weeks. And the scheme was originally announced to last for 3 months to the 31st of May. That's now been extended to the 30th of June. And they have been very clear that it will be extended again if the situation warrants. So that's a very brief overview of how the job retention scheme works. There's a lot of detail out there. It's probably fair to say that it's been evolving over the last couple of weeks. And I think also credit to the Treasury that when problems have been identified, they've been pretty quick at coming back with clarifications. And I think now it's going to be on how the actual scheme works and how the website functions. So back to you, Suki.
Thanks, Simon. So Steve, do we have any questions so far before I move on to talking a bit about where we think the tax environment's going to go into the future?
Steve, if you're talking, you're muted.
That's it. I'm just testing you there, Ali, to see if you were paying attention.
I'm still awake, Steve.
So we are. I mean, furlough is a hot topic, and we are getting quite a few questions. So I think it's key to point out at this point that if we don't get the answers or questions, it's not because we're ignoring you or we don't want to answer. We will definitely answer you offline, and we'll show everybody the questions that were answered as well. So, but we have got one here that says from Chris, what do the furlough rules mean for people engaged on company initiatives like team building, being part of remote collaboration using company systems? Hopefully it's not seen as doing work.
Suki, shall I answer that?
I've got some comments that I've read from the Institute of Directors. So yeah, I think if you go ahead and I can add to it.
So I think that the real test here is, so the first test of revenue we'll look at is your employee engaged in activity that will directly or indirectly lead to revenue for you? So the absolute thing that is clearly out is training. I think it's absolutely clear cut and the revenue confirmed that you can have furloughed employees who are engaged in training. I think we start to go into a grey area when you think about team building. That sort of starts to look like bringing a collection of people together to think about how you might do work. So I think it's probably the devil is in the detail. I think it would be how you constructed the team building. I think if it was pure training, that would be fine. I think the minute you stray into thinking about what you might do in the business going forwards, it probably starts to fall about. Suki, is there anything you want to add from the Institute?
Yeah, I mean, I'd just add to that to say that, you know, it's the work that you're doing and keeping team members involved and engaged from a well-being perspective. I would say that, you know, we've got you know, I've heard we've had some questions come into the COVID-19 website that says, I just want to keep in touch with my friend, actually, can I do that? And I'd say in those instances, the answer would be yes. Now, the Institute of Directors, there was some quite interesting commentary because, of course, directors can be furloughed as well. And when the government, they issued some guidance around how to calculate the furlough and the claim, what they actually said the directors could do was actually very narrow. And it was more narrowly interpreted than what HMRC said. HMRC said, well, actually, if you're carrying on statutory duties, then that would be okay. So I think it's a grey area, and I'm expecting we're going to continue to see some developments here, particularly because HMRC have asked, you know, they've asked companies and businesses to keep those records for 5 years. So what does that mean in terms of an audit?
One other point just to add, Suki, just to that is I think it's fair to say the inland revenue are expecting a little bit of abuse. They've actually opened up a whistleblower hotline where you can basically report employers or employees where you think they might be either abusing the system or employees are actually undertaking work.
Yeah.
So I would expect once we're through this, I would expect some scrutiny.
Okay, that's great. The questions are still coming in, so until Ali tells me to stop, furlough is a big subject. So with regards to furlough, it's a minimum of 3-week period, but what happens if we need to bring someone back before the 3 weeks? Can we pro-rata the claim or not claim at all? That's from Sarah Leach.
So I think at the moment, I think the way it's written is that if you bring someone back before the 3-week period, then the furlough claim doesn't apply because it has to be for a minimum of 3 weeks. I can see a complication. So I'm just thinking practically now, I think where that whole 3 weeks exists within a pay period, I think it's probably quite straightforward. I think there's probably an issue where you might have 2 weeks in one pay period where you've already made an application for the grants and then they come back for a week and there's probably a bit of tying up at the end of that. But in essence, it's a 3-week minimum period.
Okay.
Have we had any other questions on that, Mark, that have come into the, have we got any other insight on that in questions that have come in through the website?
I think it's fair to say, I think as Simon says, as things stand at the moment, we think it's got to be for a minimum 3-week period. So any sort of bringing somebody back before the 3-week period, it seems to invalidate a claim for that. There are a lot of sort of questions and variations around that theme. If you then re-furlough somebody, or when you can bring them back, can you extend them for a week, etc. So there are quite a few questions. There are still a few unknowns, but I think as things stand, as we've got information, what Simon says, I would concur with on that.
Yeah.
Okay, we have a question here from Steve, and he's asked us to clarify 2 things. So, and because it's quite long-winded, I'll ask the first one, and then we'll move to the second one. It's can you clarify 2 things? And the first one is, I furlough a member of staff and they want to take 2 weeks holiday in the middle of furlough. Can I claim the 80% of the grant for these 2 weeks, as long as I pay them 100% of their pay in line with the regs around calculation of holiday pay?
So I think the answer is no. The holiday has to be paid out at the full rate. I think it's something that most organisations are grappling with, and there are a number of devices that have come through. So they've relaxed some of the rules around working time, so you can now roll holiday forward. So I think most employers would be thinking, is there any reason why I wouldn't approve this holiday and the person would just be on furlough? But the answer is, if somebody takes holiday, then the furlough scheme doesn't apply and you have to pay out at the full rate.
Okay, and then the second part of the question was, for variable paid staff, I have to work out an average of the two. I have to work out an average of the 2019-20, or compare their pay in the same month. Yeah, so, in the same month the prior year, so I can further them in March to March, and then we get 80% for March. Do I recalculate?
Yeah, so, you're absolutely right. So if you have somebody with variable pay, two ways of doing it. So say you want to work out how much to claim back for March 2020. If that person was with you in March 2019, you can take the 2019, or you can use an average for the year. And then I think, obviously, if the person wasn't with you for the whole year, then you've either got to look back or you take an average of the period that they have been employed with you.
Very good. Well, hopefully, the bad way that I'm speaking hasn't ruined that question and people have understood. Very, very easy one for me this time. Does bookkeeping constitute revenue building?
I think it would, because it's putting the business in a place to make the money. So all of those, for want of a better word, back office functions, HR, IT, facilities management, yeah, they are all part of revenue generation. So I think if you furlough those people, then they can't do any of those kind of activities.
Yeah, I'd agree with that, Simon, because as well as revenue generation, there is another snippet that they say that if you're providing a service to the business, so I'd constitute bookkeeping and all of those back office functions as a service.
There is one exception, which is a very minor, which won't apply to most people. But if you furlough a statutory director, which you are allowed to do, there is a particular carve out where that director does things that they are required to do by company law, and they are allowed to do that, and that doesn't break the furlough. But that is pretty much the only type of work that's allowed.
Excellent. So we have one here. It's anonymous. It says, if an employee had resigned and was working notice, what is your opinion about re-employing and putting on furlough?
That's a really good question. I'm going to actually answer that slightly differently. So the challenge where we found is that somebody leaves an employment before March the 19th, they then join a new employer, let's say on March the 20th, and then they get furloughed. The new employer can't pay them because they've missed the 19th cutoff, but it is really clear that the previous employer can take them back on and then furlough them. So you can do that.
Excellent. A question from Leanne McConville. She's asked, does the recent bank holiday affect the 3-week period?
That's a really good question that I suspect we haven't worked
Simon,
through.
I know you've had that question. Sorry to interrupt you, but I've seen that question come in, so I can save you and ask Mark to answer because he's answered it before.
Okay.
So on that one, it depends really whether the employee is normally paid for their bank holidays or not paid for their bank holidays. That will impact on whether you have to claim or not claim for them in that scenario.
Mark, is it worth elaborating and explaining what happens with holiday in terms of payment for holiday whilst we're talking about holiday?
Yes, I think as Simon says, Simon said earlier, during if somebody is furloughed, they can take holiday during that period, but you do have to pay them their contractual rights. You can't limit it to the sort of 80% of furloughing. But as my understanding is, you can claim for the 80% furlough during that period. But you've got to top that up during that period, just to clarify that point.
Thanks.
Thanks, Mark. What else
Excellent.
have we got, Steve?
We've got a question from Lawrence. Is overtime included in the furlough calculation?
I think it falls into the definition of variable pay. So if it's a fixed overtime that's contractual, then I think that's quite easy to deal with because that's just their normal pay. But where the overtime goes up or down, then you would be a bit like the earlier question. You'd be looking at what was the pay over the average of the year or in the month in the previous. So it's an averaging thing. I think that's right, isn't it, Mark?
Yeah, that's correct, Simon. Yeah, you in a situation where somebody does sort of variable overtime on a month-by-month basis, you would be on the variable pay, looking at what the different options give them, rather than on a fixed salary.
The same would be where people, for instance, the other things just that cause problems are things like commission payments, potentially bonus schemes, whether they're contractual or not. So anything like that probably needs to start to be averaged.
Well, we have a Sybil's question in, but I want to make sure that the Suki and Simon have wrapped up there a little bit until any more questions come in for them. So how are you guys getting on?
Yeah, well, I do feel like we're taking centre stage here, Simon, so I'm quite liking this. So yeah, I'll just wrap up really quickly just to say that we are, we're in this very much in this phase at the moment where we're reacting to all of the government measures. We're really trying to understand what they mean. But really the next episode of this story is going to be, well, actually protecting what we've got. And so after businesses get through lockdown, I'm expecting that cash flow again is going to continue to be king. And how are we going to repay all of these deferrals that we may have agreed with HMRC or maybe even with suppliers? And it was quite interesting because we've already started to have some businesses talk to us about that, the next phase. So they're like, they're almost like saying, well, actually, in the past 3 months, I've generated X amount of losses. What can I do to plan around to get my relief for these losses as soon as possible? And so businesses are already starting to look up, and ultimately, because business owners, what do you want to do? You want to protect what you've worked so hard to generate over the years. And yeah, one final thought: we are going to get through this. We do expect that the tax infrastructure and tax policy is going to continue to play a central role in the government's response to the future. Like Rishi's already hinted, he's saying that he's going to align the tax treatment of the self-employed with the employed, because of course, as well as the job retention scheme, there's the self-employed equivalent. There's an acronym for it, but I can't remember what it is. And so government policy it will change as a result, and we've put a lot of money on the credit card at the moment, and we're going to have to find a way to repay that, and I'd expect tax rises to be on the horizon in the future.
Thanks, Suki. Steve, have we got any more questions? I'm just mindful of time.
Yeah, I have one for Andy, if we can.
Okay.
So for Sybil's, if you are a rapidly growing company and expect high growth during the year, however, there is an impact on sales because of COVID-19, but still shows growth on the previous year, would deviation from forecasts be suitable for self-certification of the impact?
I think you've got to put together a comprehensive application form. So yes, that is going to be important, but you've got to work out what your cash flow difference is going to be created by that, and also then what your business plan looks like afterwards to be able to repay that loan or other facility that you've got. So that's one piece of the jigsaw. But if you go with only one piece of the jigsaw, you're probably going to get a negative answer. So go with a whole set, the historic information, the cash flow, and the business plan.
I think that's probably it then for us, Ali, because we are going out of time.
Indeed, we are. Thank you, everybody. So, as I said before, if we've not answered your question, we will pick them up offline. Lucy, I saw yours. We will talk to you this afternoon. So, final thing from me is just a reminder that we plan to run a series of webinars, and so any feedback from you as to what would be helpful will allow us to adapt them accordingly. The follow-up document to this webinar, you will see that we are focused on the current time and things that you perhaps should be thinking about now, but also the things that you should start to think about as the story unfolds a little further, and Suki touched on those a moment or two ago. So I think that's it. Thank you for joining us and stay safe, everybody.